The last couple of weeks have absolutely been chaos in the crypto news flow, starting a week ago on Monday with the Binance news, rolling into the Coinbase news. Somehow we now have hashtag fire Gary Gensler trending, and everybody seems to be pushing back finally against the SEC. Now, a lot of people believe that the SEC, if they actually continue to pursue this against Coinbase and it gets to court, will probably lose. And that's based on things that Gary Gensler has said in the past. Today's guest, who's going to review a lot of this news to me, with me, you know that we rant on Fridays, James Murphy, MetaLawMan on Twitter. He has a great premise there and also has a lot of information on what's happening with the Blackrock ETF, which is also obviously the hottest story of the day. Guys, we have a lot to cover here on this Friday. Excited to have yet another lawyer who can correct me when I say stupid things on the show. You guys don't want to miss this. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel, hit that like button down below. And when you're done hitting the like button, read the scrolly, bottomy thingy that tells you that you could potentially get $60,000 by signing up for OKX, because that's how we keep the lights on. But guys, you might have missed it. Yesterday, they brought me on Yahoo Finance. I've now become the Yahoo Finance guy. They call me anytime there's something extremely controversial happening at the SEC or with legislators, because they know that I'll yell and then repost it and get them a lot of likes. And that is what happened once again. You guys might remember they baited me the last time I went on the show by putting Brad Sherman on as the interview ahead of me, talking about Cobra Coin, Mongoose Coin, and crypto being snakes in the grass. And I said that right into his face that Congress was the actual snakes in the grass. So I'm pretty bad at keeping myself out of the gulag, which is inevitably where I'm going to end up if I keep trying to get Gary Gensler fired. But they asked me the question. I'm not going to show you the video. You guys can go watch on Yahoo Finance. What could be corrected at the SEC? And I went on a long raving rant about firing Gary Gensler, SEC Stabilization Act, which of course we will talk about, and a lot else. So guys, it's been a crazy week between Crypto Town Hall, YouTube, the newsletter. There's been endless amount to cover. I really don't remember having to think this hard since college, when I actually didn't think hard at all. So maybe this is the most that I've ever had to think in my entire life. But the good news is we have amazing guests who we can bring on to think for us. Today, I've got James Murphy, aka MetaLawMan, becoming quite famous on Twitter for his threads. How's it going, James?
Fantastic. Wolf, so great to be on your show. I love your show. I've really been looking forward to this.
Awesome, man. Well, thank you. And by the way, you'll be welcome back anytime. But I want to dive in right from the beginning here. This is one of my favorite threads of yours. It's from May, before we actually saw this action, right? This was when Coinbase had been delivered a Wells notice, which of course meant we knew something was coming, but before the storm that we've seen over the last 10 days. As you said here, if the SEC follows through on its threat to sue Coinbase, I believe the SEC will lose. We all love that. The SEC case has a fatal flaw, and the problem is entirely of Gary Gensler's own making. Let me explain. You posted a video. We're going to watch it. It's really quick, and then we're going to get into this. So here it is, everyone.
I do think that working with Congress, and I think it's only Congress that could really address it, it'd be good to consider, if you would ask my thoughts, to consider whether to bring greater investor protection to the crypto exchanges. And I think if that were to be the case, because right now the exchanges trading in these crypto assets do not have a regulatory framework, either at the SEC or our sister agency, the Commodity Futures Trading Commission, that could instill greater confidence. Right now, there's not a market regulator around these crypto exchanges, and thus there's really not protection against fraud or manipulation or a conflict fee.
I love how that video had terrible sound there, but that's actually how I imagine Gensler's voice sounds. Really tinny and like a cartoon character. But okay, let's dig into this a bit more, right? Because we've seen the legal system actually pushing back quite a bit against the SEC, and I think there's a misconception that just because the SEC says something, it's all of a sudden law and true, and that's clearly not the case. But let's dig into that video right there and why that means that Coinbase has a legitimate chance of winning.
Great. Yeah, you know, the SEC trots out their win percentage at the drop of a hat, and touts out they really never lose. So I guess I'm out on a limb here. and saying that I think they will lose in their case against Coinbase. So Gary Gensler, that testimony was 1 month in. He was the chairman. This wasn't private citizen Gary Gensler. It was Chairman Gary Gensler. And he was very clear that the SEC does not have authority to regulate crypto exchanges. And now he has done a 180-degree turn and said, turns out we have all of the authority we need to go after crypto exchanges. And let's pretend like I never said that. And by the way, he also says it's been crystal clear for years. These exchanges knew for years. And this, what they're saying about, boy, we really wanted to comply and come in and register, that's all bogus. What they want to do is operate illegally. That's what they want to do. And, you know, let's just pretend like I didn't tell Congress that we don't have this authority. In reality, everybody knew the opposite was true. And Scott, I think what's important here and what was, helpful, I think, in the Hinman emails is this stuff doesn't happen by accident. His statement is testimony. That's the word for it. It's testimony in Congress in an oversight committee hearing of oversight of the SEC, and they testify. And it's been vetted throughout the SEC. Here's what the chairman is going to say. It's vetted more than what is the head of the Division of Corporate Finance, Bill Hinman, what is he going to say, which was heavily vetted? What the chairman says to Congress, very heavily vetted. And he said, we have no authority over and the other exchanges.
Yeah, not only did he say that, do you think that that's why he's been so, I would say, purposefully vague in all other congressional hearings since? I mean, we've all obviously seen the clip. I played like 5 Gensler clips. You mentioned private citizen. We all know that he was bullish on blockchain technology and specific coins as a private citizen. That's neither here or there, but the is Ethereum a security or commodity over and over and over question and the dodging the bullet and just refusing to give any clarity. To me, it feels like being vague is his strategy.
That's absolutely,
I mean,
100%, Scott. And by the way, that's wrong. That is inconsistent with our concept of the rule of law under the Constitution. It's supposed to be really, really clear to citizens what the law requires, what it permits and what it prohibits. It's supposed to be really clear so that we citizens can order our lives and decide what we do to comply with the law. So vague is the antithesis of kind of the underlying premise of our law and the rule of law. And this goes back, by the way, 800 years to the Magna Carta. Before the Magna Carta, the king could just say, you know what, I'm going to put you in jail for doing X. Hey, wait a minute, I had no idea X was illegal. Answer, not my problem. You're going to jail for X. Well, the Magna Carta changed that. And we've had 800 years of English common law saying citizens are entitled to know clearly what is prohibited. And so, you know, this idea in the Hinman emails that, hey, Bill, don't go say explicitly that Ethereum is not a security because, you know, we might decide to change our minds and say it is a security sometime later. You know, so this is crazy. This is not consistent with the rule of law.
It is crazy, and you have to wonder what the angle is. I hate to go down the tin hat theory. I did it pretty aggressively yesterday when I was on Yahoo, but I really believe that we were on a decent path for at least some sort of regulatory clarity on crypto before FTX. And it feels like now they're throwing the book at everyone as an overreaction to what happened there, because this is not, as you just pointed out, I mean, this is not the same tone that Gary Gensler and other regulators, even legislators, had before last November. It seemed like last summer we were getting Lummis Gillibrand proposed some sensible ideas about stable coins. People were actually listening to Hester Peirce a bit, right? And so it just feels like this is now carpet bombing, like a just blanket destruction to kind of hide the shame of what was happening before.
Yeah, that's right. And I tell you, you do get a sense, Scott, that there's some sort of political alliance here, because what we've heard, I think 2 or 3 weeks ago, I found really fascinating. On the same day, this crypto bro term was used by Elizabeth Warren, Brad Sherman, and the President of the United States. Choreographed.
Coincidence. What a coincidence.
All
Not
on the
coordinated.
All on the same day. And I have to believe there must be some polling data that says that's a vote getter and that's going to get campaign contributions, or they wouldn't be saying it. I mean, think of it. In the context of, is this government going to default on our debt? The president introduces it's really important that these crypto bros pay their taxes. It's...
Yeah, and one side was crypto bros pay their taxes, and the other one was like feed starving children.
Right.
Crypto bros are starving the kids, poor kids. Yeah. It's literally what they made it look like. As hyperbolic as that sounds, you're right. I just don't understand where they're getting that data. I mean, maybe they know better than me, and maybe there are that many people on one side of the aisle that like this rhetoric, but you have to imagine, like you said, that's speaking to their donor base and not their constituency. And we all know that banks are a huge part of the donor base. So I would have to imagine that that's where that sort of coordinated effort is from. But to me, it also feels like sort of whitewashing the events of last year. And just, I can say in their defense, which I hate to do, it'd probably be pretty embarrassing to come out super pro crypto after all that happened if you were meeting with SBF. And so we've heard anecdotally that there are plenty of Democrats and plenty of people on both sides of the aisle who are very pro crypto are just kind of keeping it to themselves, I think, until they see how this plays out and where that will land with the constituency. But I do want to we talked about banks, these larger institutions. I want to go into the next obvious huge news of the day, and I'll bring up your tweet again. Blackrock files for Bitcoin ETF. Now that's interesting. Why? Because under CEO Larry Fink, who, by the way, I could go get his videos of how much he has hated Bitcoin in the past, but has become the world's foremost proponent of the ESG movement in investing. The E in ESG stands for environmental. So BlackRock has apparently concluded that Bitcoin mining and trading is entirely consistent with its pro-environment values. That's great. But who's going to break this news to Senator Warren? Now, we're going to get into the ESG side really quick, but let's talk about the very fact that we're seeing a BlackRock ETF proposal, which curiously will be custodied by Coinbase. So they're very inconsistent there. If the SEC is trying to crush Coinbase, but allow BlackRock to come in and use Coinbase as a custodian. But we've seen, I believe, 22 rejected applications already for ETFs. I've made the point that I think that they're clearing the way for Wall Street, and here comes BlackRock with a Bitcoin ETF. I mean, what do you make of this? We were talking about the banks supporting them. I mean, do you think that that's what's happening? They're not so negative against crypto. They just want Coinbase and Binance out of the way for the BlackRocks of the world to step in?
Well, first of all, it is Bitcoin. So that's declared a commodity. So they're not totally inconsistent, except for the fact that they've rejected everyone that's come before. There's speculation, based on what we've seen with the communication between Hinman and Vitalik Buterin. There's, I think, reasonable speculation that maybe Larry Fink got a nod or some body language from the SEC that maybe this would not be a waste of his time. Maybe he wouldn't be number 23 rejected, or maybe he just saw what happened in the Grayscale hearing in the Court of Appeals, and that the judges were a little unimpressed by some of the arguments by the SEC.
Understatement.
Yeah.
They pushed back hard. Yeah.
And therefore, if approvals are coming, BlackRock wants to be in line for that.
Yeah, but I just wonder if they're at the back of the line where they should be, or if they will magically appear at the front of the line here. I mean, this has been one of the most contentious issues. I think everybody who understands what an ETF would mean, it means a safe way for institutions to finally invest. It means less fees than a GBTC that can go 40% negative against, NAV. It means that we would actually have a stable, highly liquid, high volume asset for everyone to safely invest in. And we have ETFs for everything in this country.
Yeah, you're absolutely right. It would open up the ability to gain exposure to Bitcoin risk to institutions who now are kind of restricted. If you want Bitcoin risk, some of them under their investment policy, they can only invest in MicroStrategy or Bitcoin miners, which have their own idiosyncratic risks. So this would be a pure play. And so, yeah, I think it would be significant if it got approved.
Yeah, I think it would be hugely significant. I can't wait to see how this plays out, because I don't see them rejecting BlackRock. I think BlackRock knows something that we don't, obviously, and they're just, I've said, I just think they're clearing the path for Fidelity, Schwab, BlackRock to take control of this industry and do it in a way that they view as compliant. I mean, let's talk about this ESG side, because I mean, this is crazy. Your tweet is so accurate, but this prevailing narrative from a certain side of government that Bitcoin is boiling the ocean, obviously not the case if BlackRock's coming in, and BlackRock has been kind of leading that charge to some degree.
No, I don't think it's to some degree, Wolf. I think they are really driving. They are the primary driver, and they can, threaten public companies. If you want us to acquire some of your stock and hold it in some of our funds, they're the largest money manager on earth. They advise pension plans, and they've come up with the ESG scorecard. And if you don't score well, you're not getting the money. And so they are big. This is a force in the world, not just in the United States. They're a force at the World Economic Forum. This ESG existed as a concept before Larry Fink got on it, but he gave it rocket fuel. And now maybe he sincerely,
a lot of money to be made by, I have my doubts about that.
Maybe he sincerely believes in the elements of that. But in any event, it's become very political. In Florida, they passed a law that prohibits the pension funds for the firefighters and the police and the municipal workers from considering those who manage that money from considering this ESG component, and they shouldn't focus on, the overall wisdom of the investment and the risk return of each investment they make for the pension. And so they prohibited consideration of ESG. So that makes it political because Ron DeSantis is running for president. It's already political, but it's going to be, I think, one of the issues that people talk about running into 2024.
Yeah, not news that I was sharing, but Mayor Francis Suarez from Miami, who's obviously also very pro-Bitcoin, has announced that he's running for president as well as of yesterday. We have a lot of pro-Bitcoin presidential candidates, it would seem. For anybody who's curious, you can go to sec.gov. I'm showing you here is the Form S1 for the actual filing. Now, there's been a lot of confusion. A lot of people said, no, man, this is just a trust when you read it. It's a Bitcoin trust like GBTC and not an ETF. Now, Eric Balkinus from Bloomberg, who we're going to have on Spaces later, he's clarified that. He says, to all those saying the BlackRock filing is a trust and not an ETF, do you consider GLD to be an ETF? Well, this is the same thing. A lot of structures under ETF umbrella, nothing like GBTC. This is the real deal. So just for clarity, since we have a lot of armchair quarterbacks, myself including, this from the experts, this is much more like an ETF than a trust. Here are a couple other takes on Twitter that were similar to ours, right? It's interesting that BlackRock is going for the ETF in the midst of the SEC attack. The optimistic perspective is that the SEC attack is to clear out the low-level peasant tier scammers so they can rebuild the same game with elite tier USA boomer scammers. Kind of funny. Here's a couple more. If you're scoring at home, Operation Choke Point 2.0, SEC sues Gemini, Coinbase, Binance US, Kraken, Fed shutters Silvergate and Signature Banks, allows deadline to pass for crypto-friendly banks, Custodia Bank, BlackRock files for a Bitcoin ETF, right? I mean, it does, when you dig in, really make it seem like this is the case. And then I love from Caitlin Long, who's one of my favorites, the BlackRock Bitcoin ETF application is approved before all other pending Bitcoin ETF applications at the SEC. You would conclude the SEC is corrupt, safe and sound because incumbents, both. She went with 81.3%. I mean, any final words on BlackRock before we move on?
Well, I if this is what opens the door, then I guess net it's good, for more institutions to have access. But I'm not using the word corrupt, but it's a little. I think the legal term is fishy. It's a little fishy if they get approval after all of these disapprovals.
Yeah, I mean, the Congressman McHenry tweeted something to the effect yesterday of, okay, Gary, here's your chance. You're picking winners and losers. What's going to happen here, right? I mean, everybody knows now, sort of to her point, that if BlackRock all of a sudden gets to the front of the line, it's going to be a seriously a fishy thing. Listen, I know you're on limited time, but have you looked at this Prometheum thing at all?
I've read up on it a little bit. It is such a crazy story.
I can't figure this out.
And the Twitter hive mind is just undefeated in terms of turning this all up like in real time, within minutes and hours of this guy coming on and testifying. It doesn't look like this is a real broker dealer. And the Chinese money involvement, how it got past the SEC is really puzzling, Scott.
I think it didn't get past the SEC is sort of the claim. I don't know if you guys have seen this, right? If you guys should absolutely go check this thread by Matt Walsh. There's another one by Adam Cochran, where he says, this Prometheum storyline has got to be the strangest thing I've seen in a while in this industry. By the way, that's saying a lot. Okay. So to give you, James just actually gave you the broad strokes well, right? But this company has existed for quite a while. When you dig into it, they raise a ton of capital, but it was all through investment banks and not through the normal VC channels that you see. They've basically been approved overnight with this ATS and are then on Congress floor within a week doing a pre-planned testimony. There's pictures of the guys like getting the questions from Congress. I don't know if you've seen that, right? And then completely going on all of the SEC talking points that we've heard here about how easy it is to register. You can just come in. This is the right way to do it. Now, the CEO are two brothers who went to a now unaccredited law school, who are supposed to be experts, and their dad. Everybody who works at the company is in some way an ex-regulator, or they're all getting paid, like a bunch of SEC guys and CFTC guys, all this stuff. And they can't list literally anything on this exchange because it's only for securities, right? And as you said, all the funding comes from a Chinese company that they paid like $1.5 million. They paid a company in New Jersey that works with Chinese companies, excuse me. These are the guys behind this company that they hired, are the guys behind Long Island Blockchain Iced Tea. If you guys remember that in the last cycle, there was the Long Island Iced Tea and they just added blockchain to their name to make a ton of money. But clearly, I mean, they literally gave these guys a license, paraded them out the day later in Congress just to make their talking points, and now are hoping they're just going to disappear. This is the wildest story I think I've seen.
Yeah, I'll tell you what, and when you contrast it with, Coinbase has a broker-dealer license from the SEC, and what they've said is they repeated, Coinbase is a public company with audited financial statements and a lot of transparency, and the SEC will not allow them to activate it to trade anything, and it's a public company. Contrast with this Prometheum, which is so odd in structure and purpose, and it went through. So it looks like it was a setup. And what's kind of offensive is apparently the SEC thought nobody would catch on that this is not a legitimate player in the space, but rather, a put-up job to mouth some talking points, and that they would get away with it is astounding.
I mean, this tweet, the Prometheum guys want us to believe that all L1s are securities and we'll need to come in and trade on Prometheum. Not happening. But enter Prometheum chain. What is that you say? These guys have their own chain. Yes, and a token. So not only that, they created a competitive chain. They have a token. And who did they pre-sell the tokens to? This company, Wangsheng, which is literally a CCP affiliate in China. I don't understand. I can't get there. I mean, if you guys want, I'm asking you in the audience, I have a 4-minute video here of Representative Mike Flood questioning the guy. Have you watched this?
Yes.
It's pretty, do you have 4 minutes? Do you have 4 more minutes?
Oh, absolutely.
Oh, we're gonna watch this video. We gotta watch it, guys. Watch this if you need to figure this out.
I now recognize myself for 5 minutes. I'd like to
I also
start
recognize
by
myself for
to read
5
a question from a comment letter that Prometheum sent in response to the SEC's December 2020 special purpose broker-dealer framework. Quote, the definition of a digital asset security as used in the proposal is a digital asset that meets the definition of a security under the federal securities laws. This definition puts a burden on the industry to determine which digital assets are securities. As a result, we believe the clarity is needed to understand the regulatory framework they must comply with, end quote. That was in a letter dated April 26 from Prometheum, specifically signed by Benjamin S. Kaplan, co-CEO of the company.
With his brother.
I offer this into the record without objection.
And dad.
This concern, which Prometheum themselves raised in 2020, probably sounds familiar for those who track this committee closely. It is the exact same concern we've heard from witnesses in front of this committee before. How can a broker-dealer register if they don't know which assets are a security and which are not? Further, it makes the same argument that other firms have made, that the lack of clarity from the SEC puts an undue burden on the industry. Mr. Kaplan, in your testimony, you were very confident that no new legislation is needed in the digital asset space to clarify this question. What has changed between the date of this letter
Watch this
in
guy
2021
with the
and
slick
when your
ponytail
firm called for clarity? And now, what has changed?
Look at this
Over
guy.
the 2+ years since that time, there's been additional enforcement actions and statement by the SECs, which have clarified any questions that we had in regards to the designation of a digital asset as a security.
Mr.
He sits
Kaplan,
back.
Prometheum's
nailed it.
website says that Prometheum ATS supports, quote, many tokens that mostly trade on crypto exchanges, end quote. I'd like to dig in on that just a little bit. Can Prometheum customers trade in Ether? If your answer is yes, please explain how.
Not currently.
Can Prometheum
Nah.
customers trade in Bitcoin? If your answer is yes, please explain how.
No.
Just for the audience at home's benefit, Ether and Bitcoin make up more than 60% of the
70.
digital asset market.
Now.
Mr. Kaplan, given that either Ether and Bitcoin make up more than 60% of the digital asset market, if the current system is working, why can't your customers trade the most popular and widely used digital assets?
Regulation and new ATSs and custodians should take a crawl, walk, run approach, and essentially they will proceed to add additional assets and abilities as time goes on. I'd like to point out when the
I'm going to reclaim my time. Mr. Kaplan, did Prometheum receive any additional exemptive relief from the SEC that has not been publicly shared?
no.
No.
Thank you, Mr. Kaplan. Prometheum's special purpose broker-dealer license does not address the core issue. There is not a consistent definition of a digital asset security within current law. This point was made obvious when Chair Gensler could not say definitively whether Ether is a digital asset security when asked by Chairman McHenry in this very room a couple months ago. In other words, that same question that Prometheum themselves raised in their 2021 comment letter is still unanswered. That's why legislation is needed. That's the problem that the chairman's bill works to solve. To testify in front of our committee that your company's charter, which only allows for trading in a very small subset of assets, is evidence that no legislation is needed, just doesn't make sense. If anything, the fact that Prometheum's customers cannot trade some of the most popular digital assets is an illustration of the broader problem, Mr. Kaplan. I yield back.
I mean, that guy is like the guy they had. He's like a cartoon villain.
Yeah, right. Yeah, yeah. Out of central casting, as they say. Yeah.
I mean, I don't know what to make of this. I just think that this season of crypto news has been very entertaining, I guess, because
Yeah.
I mean, what do you make of it? It's so obvious, right? And these Congress people keep coming up and making it so obvious. You watch Warren Davison and Emmer, McHenry, they all happen to be on one side right now.
Richie Torres.
Okay, Richie Torres is on the other side. There you go. He's a Democrat. So
yeah. I'll tell you what, Scott. I think some people are missing the magnitude of this issue of, is it a security? So as you look at Coinbase and Binance and Bittrex, and the thought is, oh well, if they're trading securities, I guess we can't use those platforms anymore. That would suck, but not the end of the world. Actually, if tokens traded on secondary markets are unregistered securities, it is a violation of criminal law to sell them. Okay, and people don't really talk about that. If there is a determination, a final determination from a court, with all appeals exhausted that, you know, these 20 plus tokens that the SEC has identified in these three cases, if they're all unregistered securities, then it's safe to say that virtually all of them are, you know, 99% are unregistered securities, which means it's illegal to sell those tokens. And there are a lot of people that I know well who own a lot of these tokens. And
I'm one of them.
yeah, and so I don't think people fully understand the ramifications, because Scott, if a court decides it's a unregistered security, it doesn't mean it's on that day and going forward an unregistered security. It means it's been an unregistered
all the way back
the whole time. So all of your sales, if done knowingly, there is that component of it. It's not what we call a strict liability offense. You have to know or be reckless about whether that was a security.
Right, and you're doing it on an exchange that has made it seem that it's right. I doubt that the individual consumer would be problematic, but you think about every single platform that's ever sold these in history.
Yeah, I doubt it too. But you know what? If there's political advantage to go after some significant crypto figures criminally for selling unregistered securities, I'm no longer sure that would not happen. Furthermore, if there's securities, that means insider trading is illegal. And so you go on YouTube and you hear all the time, hey, I was talking to the people at this at this project. And they told me they're rolling out blah blah blah, which is going to drive up the price, so therefore I bought some. Or hey, I found out that it's going to be listed. I got this confidential source who told me, hey, it's going to be listed on a major exchange, and so I bought some. So if these are,
which is literally how like every coin ever listed on Coinbase moved. If you look at the price action, right, the Coinbase listing pump,
right. So my point is, you had John Deaton on yesterday. People, recognize this guy is a heroic figure in crypto. But I don't think they get the half of it, because if he doesn't prevail and convince these judges that the tokens themselves trade into the secondary market are not securities, the ramifications are quite enormous. I mean, if you've been running a hedge fund that your entire business is trading these tokens, and you've pitched to your investors, your limited partners, that, hey, we have good connections with a lot of these projects, and so we're able to get you some alpha, in this market.
It's insider trading.
I mean, people really need to get behind. And the John Deaton, I love the guy. He's a former Marine. I don't pick heroes, willy-nilly. This guy's a heroic figure. He's not getting paid for doing this. We need to figure out a way to fund what he's doing, because you need to do exactly what he did in Ripple with the XRP holders for every single token that's been put in play by the SEC. And that's not
and
easy.
All the others, because they will be. Like you said, if those 67 coins are deep securities, we know that by proxy, so is literally everything else. I love what you said there, because he was I didn't even realize, I guess, how deep this goes myself, and I'm pretty deep in it. But that's why he was so adamant about getting clarity on library, the secondary sales not being the sales of securities, which I think we're getting some clarity on. But man, that's scary stuff.
Yeah, I think people in the crypto community may need to do a little bit more than say, "Hey, thank you, John."
Yeah, I agree.
I think he needs some real significant support, and it's amazing.
He needs to send the guy some money.
Yeah, for sure. I mean, I talked to him. He told me he came out of pocket himself to pay, because you have to have a local counsel when you go in a jurisdiction where you're not admitted. So to go up to the library, which
hired a lawyer,
was up there, I don't know, New Hampshire, Vermont, wherever it was. He had to hire a lawyer out of his own pocket to be, counsel to get him into that court so he could speak. And this is crazy. And the industry associations and individuals who've made a ton of money in crypto and currently hold a big bag need to figure out a way to help John out.
Wow, man. You just exploded my brain. And I've had the idea sort of in my head when people ask me, who do you think the SEC comes for next, right? I don't think they come after someone huge. I've been saying I think they're going to come after low to mid-range hedge funds, and VCs. And what you just said aligns exceptionally well for them making the case that these secondary sales would be securities. I think now they're just going to go for a whole bunch of wins they can get on settlement without having to, put a massive team behind it. I think they've poked enough of the huge beast. So I guess we'll see. James, by the way, I don't know if you're available, but we are doing Twitter Spaces at 10:15. I know you have a job. You're an actual lawyer and probably have things to do. But if you'd be interested in joining, we're probably going to talk through these things much more thoroughly. And we do it every day.
I tell you what, I love your show. I've really been looking forward to being on with you. You really take this flood of information and news that comes out every day and kind of make it accessible to, non-lawyers and everybody else who's really desperate to understand, what does this mean? What is important in all of this, and where's it going? So I love your show, love your content, and I'd be delighted to be on Twitter Spaces with you anytime.
Yeah, I'll ping you offline about that. I really appreciate your words, but you will notice that I've started bringing lawyers on because you guys really can give clarity. I mean, you just gave a master class here in the real implications of what this could mean down the road. And in all of my digging, I never even really considered that aspect. So I got to thank you very much, guys. Everybody follow MetaLawMan on Twitter. Really, his threads are incredible. Also kind of the same, right? Well thought out and not necessarily spoken in legalese so that everyone like myself can actually understand. So, James, I'm going to ping you after this about Spaces, but thank you so much for your time. Guys, we're going to keep going on here with the news.
Absolutely. Thank you.
Have a good one, man. So there you go, guys. Wow, that's pretty intense. Pretty intense. I feel like I need to send John Deaton a fruit basket and a really nice bottle of bourbon or something. So I'm going to do that after. The first thing I just did, if you guys saw me typing, is I typed my producer and said, please edit the part where James just praised John so I can post it on Twitter and try to get John some more support. So I think we'll try to do that and share that video. Guys, digging in a bit more to the news, obviously, believe it or not, all that we covered, that ain't even it. Of course, we just talked about Caitlin Long's take on Blackrock. You know that Caitlin's a friend. I've had her on the show 15, 20 times. I've sat down, interviewed her in person quite a few times. I just wanted to point out, Caitlin Long, CEO of Wyoming-based Custodia Bank, named Top American Banking Innovator. And I think it's just incredible to see her receive this award and the pushback that this award coming in the face of her getting rejected over and over and over again by the Fed and pushback from the SEC, simply because she wants to be a fully backed one-for-one bank that services the cryptocurrency industry. Now think of that. She went and applied for a Fed master account, which would allow her access to the Fed banking system, with the proposal that her bank, Custodia, not be fractionally reserved, not do lending like that, and be literally fully backed. And they said no. They said no. And so obviously we know that this was the beginning of this entire fight in January, before we've seen all this SEC enforcement action. She's been on the front lines. And I just love the fact that one of my favorite people is being recognized for that, even when she's not having so much success on the actual business. Now, of course, next we're going to talk about price action just a little bit. Bitcoin Ether moved toward oversold territory in post-FOMC downturn. Now, Rand Neuner was on Spaces yesterday, and he said, actually, if you look, the Bitcoin move after FOMC, that $1,000 drop that happened very quickly, actually was almost exactly at the same time as all of the fear, uncertainty, and doubt about Tether hit the market. You guys may have seen it. We're not going to dive deeply into it. But basically, the pool on Curve, where people use stable coins, supposed to be 33% DAI, 33% USDC, 33% Tether, shot up to 70% Tether, effectively meaning that people were selling their Tether into this pool to exit it into other stable coins, caused a string of people projecting ideas that maybe somebody knew something they didn't. Tether became unpegged by like 0.3% on a couple exchanges, which is not actually a depeg. And that's when Bitcoin dropped, right? That was a long way of saying it probably has nothing to do with FOMC. And on Sunday, you'll see I recorded an interview with Paolo Arduino from Tether yesterday when I heard this news, which will be out on Sunday. And he makes it very obvious that nothing untoward happened there as usual. And you might have seen actually Tether now has address the request that's been there for years from CoinDesk and others to give full transparency, and they have given full transparency into their books going back a couple years. It was announced yesterday to CoinDesk and to others. So I think we're going to get a lot of clarity on Tether's backing and books. But yes, Bitcoin, Ether moved toward oversold. They're talking about Bollinger Bands. I don't really see much here. That's what they're talking about. But I will just really briefly looking at Bitcoin, because I've been saying it over and over and over again. Listen, technical analysis is astrology for men. You guys know how I feel about it. I do it. I love it. It's a hobby. But guys, it's a risk management tool. It's not a crystal ball telling you what's going to happen. But I've been yelling about 25,212 area literally since it broke in March, right? We had this sort of series of lower highs, lower lows of the bear market. You started a new bull trend when you break above that last lower high. And that's what happened. And I kept saying, guys, don't get excited up here at 30. We're probably going back to 25 rationally. But market was overbought. There was way too much, hey, we're going to 100,000 because we made it to 30 talk, which was nonsense. Well, here we are. Yeah, we're on 100 to 200 MA. But if you guys look, there's an inverse head and shoulders targets up here around 41,000. We bounced right below 2512. For now, I don't see any reason to be panicked. ETH, same thing, kind of getting wrecked a little bit more, but 200 MA right there on the daily. I just don't see anything here to scare me off yet. Next story, speaking of John Deaton and the Hinman documents, XRP drops 5% as markets digest Hinman documents, SEC court case. I think that's because people realized that the Hinman documents were a bit of a nothing burger, or at least this new episode in the series of the Hinman documents didn't really show anything new. If you guys want all the context, as James said, I just had John Deaton on with Eleanor Terrett to talk about this. So just go back and watch that. I think it was 2 days ago. Can't even remember what day it is at this point. But the Hinman documents, huge really for the personal defense of Brad Garlinghouse, not as much for XRP, but certainly a bigger context for the Ethereum conversation that is coming. But yeah, take a look at the XRP chart, right into resistance, dropping rock down. I don't see any reason to get particularly excited about XRP right now. And I also showed this video, which you guys can go back and watch on that day, showing why these Hinman documents are considered somewhat important in this context. So I'm kind of cooking through it here because we got 30 minutes, obviously, until I'm going to be on Twitter Spaces. Maybe the biggest news of the week, Representative Davidson introduces SEC Stabilization Act to remove Chair Gary Gensler. Of course, Majority Whip Tom Emmer also was a part of this conversation. We immediately had Warren Davidson on Crypto Town Hall the next day, and he made the very obvious argument that we've been making here over and over and over and over again, which is that the SEC, as James said as well, is acting in bad faith, right? It would be one thing if we believed that the SEC was doing this in our best interest, if they were actually digging in and had a genuine case that these things were securities. But the fact is they're a bad faith regulator who's acting in an activist manner, huge power grab, trying to take control, make sure the CFTC and legislators don't have time to catch up. And we finally have people pushing back. Now, do I believe the SEC Stabilization Act is going to pass? Absolutely not. Do I believe that any law can pass in this broken ass country? No, I don't. So the fact that we have something this specific, maybe even if it gets to the floor of Congress, it could pass because that's Republican dominated. But do we believe that this is going to the Elizabeth Warren Democrat dominated Senate is going to hit Biden's desk? No, this is a PR move. And I'm here for it, to be honest. But listen, you can't even think about getting a bill passed unless you propose it. So I'm glad that they did it. But no, I don't think that we're going to see in the next few months the SEC flipping and Gary Gensler gone. I would love to see enough political pressure to see that conversation continue, though. Now, on to the next story, guys. You'll listen. This is yet another heartbreaker for me. Crypto lender Abra has been insolvent for months, state regulators say. Now, we don't have all the facts around this, and I refuse to pass judgment until we do. You'll ask why, because in a long line of people that I've been friends with in the crypto industry, I don't want to see Bill Barheit go down or to find out that there was anything untoward here. And it's not as damning as some of the other cases yet. We were just talking about yesterday on Crypto Town Hall, the news broke. Not this news. The news broke that Abra was going to be unavailable as of yesterday to all Americans. I reached out to Bill immediately and said, man, this sucks. And he said, Abra will be fine. Yet another blow to Americans from the irrational regulator, something to that effect. But then Abra was pulling back from Americans because of regulatory pressure. Well, now we have the state of Texas basically coming out and saying that Abra was fraudulent, insolvent, and hiding that fact from investors. That is obviously what we somewhat saw from the Celsiuses and BlockFi's and others of the world, that they've been insolvent since March 31st, 2023. We were saying that Abra was impressive because they were kind of the last man standing here. So listen, even if they are insolvent, I'm obviously hoping that there's nothing here against Bill, who's been a friend of the show and has been on Crypto Town Hall more times already than I can count. And we've only been doing it there for a couple of weeks. Next story, moving on. Dmitry Chernyak's The Goose NFT sold for $6.5 million at Sotheby's auction. I still don't understand how anyone's buying an NFT for $6.5 million, right? Generative art. But the real story here is that this was owned by Three Arrows Capital, right? And their NFT collection entirely sold for $11 million. That's money that will theoretically, I believe, some of it, whatever Sotheby's doesn't keep, go back to creditors. So there is some good news there, I think, along this side, that they are getting this much money for them. Kyle Davies from 3AC quickly tweeted that this was like a historic auction, but that when his new exchange, OpenX, becomes the biggest in the world, he's going to buy this back at any price because it has to come home. Delusions of grandeur, man. Impressive thing. You guys know that I met with Kyle when I was in Dubai. Kyle didn't know that I was meeting with Kyle. I crashed a meeting with him as a Voyager creditor because I was pissed off. But I can tell you that those delusions of grandeur, whatever they are, I think he really believes it. I think he really believes he's creating the biggest exchange in the world and that he will be buying this back. You can see that Sotheby's has auctioned off quite a bit of Dimitri's art. I'm really actually just impressed that they're still getting this much at Sotheby's for NFTs. I wouldn't have expected it. And listen, guys, the last story I had here was the Prometheum, which we already dug into. So not much left to discuss on that front. Woo! Guys, what a whirlwind. What a whirlwind. And like I said, Twitter Spaces in 25 minutes. Obviously, we are going to be beating the Blackrock story to death. We're going to take out a broom and a couple bats, and we're going to put it on the ground like we do every single day, beat these stories to death. But it's a big story. It's a big story, and we will have a couple ETF experts from Bloomberg joining to really give their position on what this means for the industry, whether it is a trust, whether it is an ETF. And of course, I'm going to go bother James and try to get him to come on and give us his legal perspective. Because listen, there's a couple hundred. We'll get, 5 to 10,000 people will watch this video. But if we go on Twitter Spaces, well, it'll be like 700,000 people have listened to your conversation. So kind of operating on a different scale over there. Guys, I will be back, of course, with Macro Monday on Monday, which is always a good time. I hope you guys enjoyed this week of content. It's been a lot. Sleep has been a little more challenging this week, I would say. And the other thing about Twitter Spaces is that Ran and his massive team are in South Africa, and Mario and his team are in Dubai. So coordinating and preparing these shows on 3 different time zones has been really challenging and requires a lot of us to not sleep nearly as much. But I really think it's worth it. I know I try to stay like non-political and try to stay calm, but I think you guys can see that I've been a little bit pissed off and, what we're seeing from the SEC. And I really believe that right now we have to fight, and so there's going to be these times where we're not going to sleep as much and we're going to work a little harder and we're going to push to share information. But listen, there may not be much you guys can do. Call your congressman, call your senator, start writing letters. But the one thing I know that you can all do, no matter how small your presence is just go ahead and tweet #Fire Gary Gensler. That's all I've got for you guys. Thank you so much. See you next week. Bye.
That's dope.